We have a bona fide shock to report today. The Swiss National Bank has been attempting to stop its currency going beyond 120 to the euro back since 2011, a very controversial flaw. Today it abandoned that attempt and the result was confusion across world markets. We can show you how dramatic the move in that central rate between the franc and the euro is here. Plainly, Switzerland is a very open economy. Exports are vitally important to it. It really did not want an overextended, overvalued currency, but that was the risk given its appeal as a safe haven. It's finally decided to stop trying to weaken its own currency, and the result has been a very dramatic depreciation by the euro against the franc. Now, why would the Swiss National Bank have made this decision? It came as a very big surprise. We thought even only a few days ago that they were going to carry on. Well, here we can see how their balance sheet has expanded compared to the other big central banks since the beginning of 2008, the crisis year. And you can see that, broadly speaking, they have needed to buy assets to build up their balance sheets at much the same rate as the Federal Reserve has done in the US, more so, remarkably, even the Bank of Japan, which is going for broke, and certainly far more than the European Central Bank. Now, the European Central Bank, after allowing its balance sheet remarkably to contract for a while, is, more or less everybody seems to believe, ready to launch into full QE, buying government bonds. That means that its balance sheet also would begin to expand. That in turn would mean that the SNB would need to do even more in order to keep its currency weak against the euro. It decided it wasn't going to go there. Now, the most important impact on this is on the euro itself. Let's take a look at the euro on a trade-weighted basis here. And you can see that apart from a few months in 2012 when the Eurozone crisis was at its very worst, as you can see from the spread at which Spanish bonds were trading then, apart from those very few months, the euro is now as weak as it's been in a decade. It's been a long-running question: how can the euro continue to stay so strong when it might well help revive the economy if it were to weaken? Many people wondered if the Swiss flaw had a lot to do with it. Well, we now know that it very much did. But that raises further questions. Could it conceivably mean that the ECB might decide, therefore, that it doesn't need to go through with expanding its own balance sheet now that its currency has been allowed to weaken? That question is being raised. Also, look across Central and Eastern Europe. There are many countries there where it's very popular to borrow in Swiss francs. It's a very good idea while the Swiss franc is being held low. Could become a very bad idea indeed now that the Swiss franc is being allowed to appreciate. There have to be at least a reason to monitor those countries for the risk of a crisis. Beyond the shores of Europe, note that the gold price has ticked up significantly in the last few days, that there is now this belief that the attempt to export deflation is going to spread around the world, that there is a risk of currency debasement arising once more. Here in the US, we've had now 5 consecutive negative days for the S&P 500, which isn't healthy. The earnings announcements we've had today, including Intel that came out after the bell, have generally not been received well. People are thinking pessimistically once more. On Friday, we get inflation data from Germany and from the US, obviously very important given that we're in the grips of a deflation scare. More broadly, given that we've had a big shock from the Swiss National Bank, these shocks can have ripple effects, they can have consequences. Everybody is going to be very nervous to see if it causes dislocations elsewhere.